Adobe just dropped its Q2 2026 earnings, and there is a lot to unpack. From a massive strategic pivot that's already shaking up Wall Street, to record revenues, AI milestones, and major executive changes, this call was anything but boring. Stick around, because by the time we get to number 1, you'll understand exactly why Adobe is making a bet that could reshape the entire creative software industry. Let's count it down. Coming in at number 10, Adobe completed its acquisition of Semrush, adding approximately $480 million in ARR to its book of business. Semrush is a leading provider of search engine optimization and generative engine optimization tools, and Adobe is rapidly integrating it with Adobe Experience Manager to build what it's calling a comprehensive brand visibility solution. The big debut is set for the Cannes Lions Festival of Creativity later this month, where Adobe plans to show the world how brands can dominate visibility across LLMs, social platforms, and traditional search all at once. At number 9, CFO Dan Durn announced he's leaving Adobe to pursue an opportunity outside the software industry. Stepping in as interim CFO is Steve Day, a 20-year Adobe veteran who has held numerous financial leadership roles across the company. CEO Shantanu Narayan was quick to reassure investors that the financial leadership team is seasoned and that Adobe won't miss a beat during this transition period. Number 8, Adobe's customer experience orchestration business is on fire. AI-first ARR in that segment grew 4x year over year, and Adobe launched its new CX enterprise platform at Adobe Summit in April, where over 14,000 people attended in person. CX Enterprise is an end-to-end agentic AI system designed to help enterprises manage the full customer lifecycle, from acquisition through loyalty, using AI agents, model context protocol endpoints, and a governance layer for auditable, personalized workflows. Over 150 leading enterprises jumped into the early adoption program before general availability. At number 7, Adobe delivered record revenue of $6.62 billion in Q2, representing 11% year-over-year growth in constant currency. On the earnings side, GAAP EPS came in at $4.25, up 8% year-over-year, while non-GAAP EPS hit $5.96, an impressive 18% increase. Strong subscription bookings to revenue conversion and disciplined investment management across the company drove those results. Total ending ARR reached $27.1 billion, growing 12.5% year-over-year. Number 6, the CEO succession process is moving forward. Shantanu Narayan, who has announced his intention to transition to executive board chair, confirmed that the board is actively engaged in a comprehensive search process. The goal is to have Adobe's next CEO in place in time to put their own stamp on fiscal year 2027 planning and beyond. Shantanu emphasized that his focus in the meantime remains squarely on driving execution against the product roadmap. Coming in at number 5, thanks to strong first-half performance and the addition of Semrush, Adobe raised its full-year fiscal 2026 revenue target to between $26.5 billion and $26.6 billion. Full-year non-GAAP EPS is now targeted at $24.35 to $24.45. For Q3 specifically, Adobe is targeting revenue of $6.67 billion to $6.72 billion. The company also maintained its target of a roughly 45% non-GAAP operating margin for the full year. At number 4, this is the one that rattled analysts the most. Adobe is making a decisive pivot to a freemium-first strategy, deliberately redirecting traffic away from direct-to-pay journeys and toward friction-free onboarding experiences for Acrobat, Express, and Firefly. The company is also deferring previously planned Creative Cloud price optimizations in the second half of the year. Together, these decisions are expected to reduce organic ARR by roughly $500 million, a short-term hit Adobe is consciously accepting in exchange for accelerating user acquisition and building long-term lifetime value, much like the Adobe Reader model did for decades. Number 3, Firefly is becoming a serious revenue engine. Firefly ending ARR across Firefly apps, credit packs, and Firefly Enterprise is approaching $300 million as Adobe exits Q2, and ARR grew approximately 50% quarter-over-quarter. Creative freemium monthly active users crossed 90 million, up more than 70% year-over-year. Adobe also announced a partnership with NVIDIA to bring accelerated computing to Firefly Foundry for faster custom model generation across image, video, audio, vector, and 3D formats. At number 2, Adobe's user base is scaling at a level that's hard to overstate. Acrobat and Express monthly active users surpassed 850 million in Q2, up roughly 20% year over year. Acrobat AI Assistant paid MAU grew over 150% year over year, and lifetime AI users in Acrobat tripled in the same period. Traffic to Adobe.com grew more than 40% year over year overall, with the creativity and marketing segment growing over 50%. These numbers are the core reason Adobe is confident enough to make its freemium bet right now. And the number one most important takeaway from Adobe's Q2 2026 earnings call, Adobe's total AI-first ARR grew 3x year over year to more than $500 million. This single data point captures the entire thesis of what Adobe is building. AI is no longer a feature, it is the growth engine. From Firefly to Acrobat AI Assistant to CX Enterprise Coworker, Adobe's AI portfolio is monetizing across every customer segment, and the company is doubling down with aggressive freemium expansion, agentic enterprise tools, and deep integrations across ChatGPT, Claude, Copilot, and Gemini. Love it or hate it, Adobe is swinging big, and the next 12 months will tell us whether this bet pays off. If you found this breakdown helpful, hit that like button and subscribe so you don't miss the Q3 earnings breakdown when it drops.